Hi everyone, let's take a look at the markets again. There's been some wild action in the markets lately. This dip in the S&P was a buy, as I suspected. It didn't catch the 200-day, unfortunately. It caught the 150-day. I don't think we'll see a touch of the 200-day moving average down here. We could catch it later on over here, but so far the markets look fine. We made a big bounce. The RSI lost 50 on the S&P. I don't like that. That could be a sign of further weakness. We are above the cloud. The future cloud is sideways compared to where we are now. Okay, it's not up and out anymore. So sideways is the most likely action for this market, I believe. We were overbought here, too stretched. We were oversold here, and now we're meeting in the middle. And that's often the case in stocks. The Uber bulls are wrong. The Uber bears are wrong. And they meet in the middle. I think we're going to see some more sideways action, some more dips, and I think those dips are going to be bought. I think the 150-day moving average is going to hold. Worst case is we see the 200-day moving average. I don't think you see the 200-day break, not for a while, not until this summer, most likely, or early fall. The market's in a bullish time of year, January to March, and we are going to have some opportunities to buy in the future. We have a gap down here at 2024. You may very well see that. If you do, it's probably going to be a buy. I don't see any reason to panic or to sell anything right now. Looking at the McClellan oscillator, it's just about neutral, right about in the middle. We got, a sell zone up here, buy zone down here, and we're directly in the middle, and the markets reflect that. If we were to fall down in this area, that would warrant caution. Right now, the big event is the end of the month, right around January 25th. We're going to have the Greek elections, and we're going to have a big meeting of the ECB, and we're going to discover whether they're going to print a great deal. They're talking a tough game right now. The ECB is famous for talking a lot and doing nothing. And we're going to find out also whether or not they are going to bail out Greece again or let them go. I think Greece is going to leave on their own. And I think the Eurozone is going to let them and focus on trying to ring fence their own banks, which they may very well do for a time. But regardless of what they try to do, eventually this will cause problems. Other insolvent nations will see their interest rates rise. And there's not a whole lot you can do about that. Even buying the bonds of the insolvent nations like Spain, like Italy, like some Slavic nations, you're still going to see some contagion and some problems. Going across the board, this is a weekly capture of the Qs of the NASDAQ. Very queer looking candle here. It's hollow red. Hollow red candles, the price action normally revisits that area. That's often the book on red candles, hollow reds. That's interesting. S&P on a weekly, it's Friday at 254. So this is a great looking hammer. Let's get a better look at it. But I'm not totally thrilled about a massive move higher from here. Things have changed a bit. We sold off a lot. We made a new low. We didn't close below it on a weekly basis, so it's temporary. And we're back in the channel. And you can see this channel, this rising channel, has been very reliable. Okay? Do not bet against this kind of reliability. Whenever the market dips, up we go. There's no reason to think that's going to stop. In fact, this upper trend line I've drawn very conservatively. This market could consolidate, move sideways a little bit, dip, but on a weekly basis, stay in the channel, and literally make a move up to 2250. 10% higher from here is 2250. That's a reasonable target for the top, for a top. So keep an eye on that. Looking at the Qs, all-time highs 109, that would be their target. Small caps are hanging in there. They don't look great. They don't look horrible. They got a big sucking gap below them they haven't filled. Looking at small caps on a weekly, Found support right at the cloud, huge bounce. Still have not broken over 121. That's a big area of resistance. If it can get over 121 and stay over 121, that'd be very bullish. Right now, I'm saying sideways. Sideways with some dips. Looking at Apple, looks fine. I closed my long on Apple way too soon, and I am very sad about that fact. Huge move here. Found support right at the 100-day moving average. You get a key moving average. It's rising. Stock put in a hammer. Don't short. If you're short, get out. It's a very scary fall out of the cloud. Hands off. Beautiful reversal candle. And we just completely squeeze the shorts and blast it off. Again, I think this goes sideways. And if it can consolidate above the cloud here, it could continue to rise. On a weekly basis, you can see Apple. There's nothing wrong with Apple. Okay, it can go sideways. I think it's going to go sideways here, but it can continue to move up. Twitter looks great. It put in this pretty bullish candle. We had higher lows, as I've talked about in previous videos. MACD's curling up here. It's going to go into the buy side in a minute, in a few days. Came up, stock took out a lot of days here, going sideways with this candle. That was a really enveloping candle. There's a lot of resistance at 39.25. We've now broken that cleanly, and we're over it. This is actually a good place to add to positions. We are under the cloud. That's not so great. So this isn't an ultra bullish chart. We have recaptured the 50-day moving average, but it's moving down. So stock might have to move sideways a little bit here. The CEO recently sold a lot of shares. That's a bad sign, but of course the stock's moving against that regardless. There's a gap at 41. That's my target. For myself, I'm long Twitter, small long position, but it'll still be handsomely profitable at 41. We've now broken 40. If we can close above 40, that's just very good. That's a big bullish candle on a weekly. A lot of call options taken out in Twitter. I like to look at the 20-week. The 20-week is falling, but the stock's extended from its 20-week. And even if it's going to go down more, a retest of the 20-week is not out of the question, and that's at 44. So stock got oversold, dip buyers stepped in, and now they're really stepping in, and we could see a big move up to the 20-week. And that can happen on light volume. SPY we touched upon. TLT bonds look very stretched here. This is a great looking candle. It's a bullish engulfing. So I wouldn't be surprised to see this come up again. It could even come up and make new highs. But this is very stretched. Tough to get too bearish on bonds here. This chart looks amazingly bullish. They've easily broken out. But a lot of people are calling for a top on bonds, and either they're right or they're wrong. It's hard to know which. Got a lot of gaps down here we're going to have to fill at some point. Yeah, 127, 125, 120, another 125, 124, I believe. No, that's not one. Down here at 122. Now, I'm not saying bonds are going to crash. I'm just saying they're very stretched. And if they came into baseline at 126 and then continued their move higher, that would not be out of the question. Rates are very low on the bonds, on the 10-year, on the 20-year. How much lower they can go, who's to say? But they're very low. They're recession class low. That's extremely nerve-wracking in a lot of ways. We got a little downtrending line here. If bonds can consolidate and break out and keep going, or even come back in and see a breakout that fails perhaps, that would be pretty bearish. But bonds look ultra strong. I'm staying away from them on the short side. They burned me on the short side once last year, and that was enough for me. Volatility is coming back down to earth. Playing volatility to the long side is going to be a very profitable trade in 2015. If you want to look for something you can really buy on the dips, buy volatility. There's a lot of unknowns out there in the market. Even the people in charge, quote unquote in charge, the Fed, the ECB, even they don't really know what's going on. Even they don't really know what they themselves are going to do. They talk a strong game. They make comments. in news conferences. They pump the markets, they hype the markets, they squeeze shorts. They're trying to talk their way out of trouble. That's going to work for about 90 days, maybe even 6 months. That can last a while. Eventually, it's going to wear off. When you see the market rally on comments and then give it all back and then some, then it's time to really, really get risk adverse, really trim your positions, trade very light, buy a lot of volatility options, a lot of VIX, and get ready, because there's going to be some real shit happening this year. The markets are very stretched. We're in the 5th year of an expansionary period. Most expansionary periods do not last any longer than 5 years before you hit another recession. It's just a normal business cycle. It's been happening since the beginning of time. So this is not a year to press your bets on the long side too far. I think we have another 10% in the markets, but it's going to be an ugly road to get there, and it's going to be a sell the news type of event. You're not going to want to go long at all-time highs at 2,300, 2,400, 2,500, who knows. You're going to want to get out. There's going to be a big plunge this year. September, August is a very bearish period traditionally. We've had nasty sell-offs in May. It's tough to know, but buying VIX and sitting tight will definitely get you some nice gains this year, even if you just hang around for a few weeks. Guild has been a darling in the biotech land. I am very bullish on biotech. I think it's the last remaining good sector. A lot of darlings, such as good as Twitter looked, it's still well below its all-time high. I don't have Tesla here. Tesla was a former darling of Wall Street, momentum darling. They bought it on anything, on everything, and it does not look that great. I talked about it before. I said we might get some huge upside to squeeze some shorts, and that did not happen, which I'm happy to see, actually. I think it's great on the short side now. Oil prices are getting crushed, and they're probably not going to rise very much. This stock put in a great hammer. That hammer was invalidated today. The low of the hammer, 204, is the last line to break. Stock's got a small gap up here. Yep, small gap. Stock could hold this low and bounce up and try to fill this gap, but this now has a pretty good downtrend happening, say right about here. I would expect that to be pretty serious resistance. So we can move sideways, pop up again. There's a lot of shorts that flew into Tesla. That's why I don't like it from the short side. I think it's going to go sideways a little bit and burn some shorts. Let's put the cloud on. It's a ways away from the cloud. The cloud is downtrending. But if it came up a bit and was still under a downtrending cloud, that's a short setup each and every time. And Tesla, there's just no real reason to buy it on the growth side. It's a growth name. It's a growth stock. With oil so low, they're still going to sell cars. They sell great cars. They make great cars. That's still going to happen, but the stock's ahead of itself. Okay, it's at 206. The high was about 300 right here. Half of 300 is 150. So to see it come down to 150 is not unusual. That would be a 50% retracement. That's common. 150's right about here. And as you can see, let's see if I can get over there. That's a favorite target of mine, because that's also the scene of a huge breakout. Okay, it was consolidated in the 150 region. Fake move down. Huge candle on volume, and it was just off to the races. Then went parabolic, and then failed, because all parabolic moves fail. Came down, filled some gaps. Counter trend rally. That failed, and now we're coming back down. And it's got to test its breakout at 150. It's coming into the cloud, the weekly cloud, falling out of that and coming down. 150 is right about here. That would not be a bad spot to consider nibbling long, real long, all-time long. And you might average down from there if you got a bigger flush down to the 100s, but I don't know how low it's going to go. I would be interested in buying if I could get it under 150, absolutely. But it's a good company. I see no reason why it's going to go out of business. This is not going to zero or anything, but lithium is in short supply, and an increase in lithium prices could hurt them. Gas prices getting crushed. These are bearish headwinds for this stock, and it's very extended. Let's go look at a monthly. There's and just for the heck of it, let's throw in the MACD. Yep, gotta go here. MACD's curled over, crossed on a monthly basis. This low right here at 192 is huge. If we lose 192, we're probably going to 150, at least into the 140s, and I expect it'll be a pretty quick sell-off. I don't think it's going to take long. We've been kind of perched on these upper levels, 240s. Lost the 240s, put in a hammer that could have continued. Instead, it failed. That's bearish. That's a bad sign. The buyers stepped in, and there was no follow-through. No one else wanted to take the baton from them, and they're selling it. So expect this to move down to 150 in the coming months. When? Honestly, don't know. Not along at this point. As I said, I like biotech. Guild had a good day, reclaimed the 50. I sold my Guild way too soon. The biotech index, IBB, looks great. This is a daily chart. We get a MACD cross. If you go look at a weekly, it looks even better. Broke out of this descending wedge. I've talked about this before. Looking at the daily, I mean, it broke out of this range right here. 309 was the high. Broke out of that range, came up, couldn't make a new all-time high, but every time it fell back, they bought it up. This is a long buy tail. Bought it up. Somebody wants to own this thing bad. It has strong institutional support. It was a real tough sledding at 315 in the past, 314, and now we're making closes over those levels, give or take a few cents. That's a really good sign. I like biotech. Going to be one of my few strong longs going into May. ACT, beautiful chart. Was making lower highs, kind of fading down, found support at the conversion line basically, and the rising 20 week wasn't too far away. Boom, huge candle there. This is a weekly. I really like this. I've got February calls on this stock. Came up. They if you watch the intraday action, they tried to flush it once, tried to flush it again, couldn't even break the previous day's low before it bounced up again. So I still think it's a buy at these levels, and some people would say this is extended, but it hasn't quite broken out to all-time highs, but it looks like it's just coiling, getting ready to, action is tightening, looks like it's just getting ready to burst. Somebody bought a few hundred or few thousand 290 calls, January 290s. That's a pretty bullish sign if those turn out to pay. I have February 280s or 290s, I think, and those would also explode in value. Great long-term position here. Biotech has been a big benefactor from the government's total inability to regulate the healthcare industry. AGU, Agrium, looks good. Huge breakout here. Price action tightened. Support in the cloud. Busted out of the cloud. Busted out again. And now it's holding above previous action. You got to like that. Celgene, not quite as bullish as the others, but still looks good. Faded down here. They tried to really flush it today. Buyers stepped in. Really supported the stock. It's going sideways. It could go sideways a bit more and try to retest the all-time high, but it looks good. FireEye had a monster day. FireEye has been an absolute beast the past few days. 29 to 33, up 2% today, up 7% yesterday. Again, it had this downtrending wedge here. Sometimes it helps to squeeze your chart together. Right here, when the moment it broke above that on volume, you gotta buy, especially this level right here at 31. Boom. Halo, just an absolute beast. Everyone's talking about this on social media. 10 to 14. I mean, just a monster move. How long that sticks? I don't chase moves like this. It's just way too extended. I mean, look at this thing. This is filled the gap and then some, came all the way up to previous resistance. It's got a gap up at 16. It's probably going to 16, but The call options on it are wildly expensive, and I won't chase. ACAD is another darling. Looks beautiful. Broke out of this descending wedge, popped, held, bursted up from there. I own calls on CAD. The cloud here looks wonderful. I think it's going to flag out, consolidate, and then keep moving higher. My targets are 35 and above, and there's no real resistance on this stock. It's making new all-time highs. If you wanted to, you could say, you know, there's some kind of trend line like here. I mean, you could say it's lower. I wouldn't know how to draw this, but basically, new all-time highs are very, very bullish. The stock has no resistance. This stock could go to 40 easily. Better to get a weekly capture. Weekly came in the cloud, broke out of the cloud, has support everywhere. Made a little flag here. Broke out of that, and it's a little stretched. Might need to come in a little bit with some time, but I don't see anything bearish here. Wish I had gotten involved back at 28, quite honestly. Gold is just hanging on strong. Too much uncertainty in Europe. Not a short right now. I'd love to short gold. I don't believe there's long-term strength in gold just yet. I think it still needs to flush, but as you can see why gold is going to be an investment for the next 5 years or whatnot. So much uncertainty, so much money printing being posited as the solution to everything, which of course it is not. If money printing took care of everything, we would have printed all the money in the world back during the Great Depression and wiped the Great Depression away in 6 months. 10 years after the Great Depression started, it was still going strong. And that was after FDR devalued the dollar with a stroke of a pen in one day. So the printing will not work. It will put a big bid under gold, though. This is a nice little pop. It's holding up here. It's got a gap, multiple gaps below it. Just keeps putting in more gaps, squeezing up. It's just impossible to short right now. But otherwise, you can play gold to the long side. You can play it via spreads. You could sell some 120 calls, for instance, and some 108 puts. It's really tough to gauge where this is going. This has been all over the map. I don't like it from any side. If you want to take long-term puts, you could do that. The cloud is totally inconclusive. If you went to XAU, gold, by the way, is up in terms of euros and most of the currencies. It's just in dollars that it's been sideways. Looks a little stronger here on the metal chart. GLD is paper gold. It's making higher lows, but it's been making lower highs. So we're still trapped in this wedge, and this can continue. And then eventually, I think, unless those lower highs get broken to the upside big time, it's lining up for a big flush down. Lower highs usually win. Until they're proven otherwise, they are the trend. The higher lows here were unfortunate for the bears, but that's a counter trend rally. That happens, and it can last months, and it's lasted months here, and who knows when it ends. The bulls can get very cozy and very proud, and then suddenly these lower lows, these lower highs make themselves known, make themselves felt, and boom, it wipes out the bottom calling bulls. A lot of bottom callers, a lot of fear at this handle at 136. So I wouldn't be surprised if it does hold. We could go make a double bottom. I would not press my bets to the long side on gold just yet, but that's up to you. 1220 is a key point. We're hanging right around there. We got as high as 1238 before. I had a small suspicion we could come up and make a lower high in the 12 teens. We've done it. I don't know any smart traders that are long gold. They are neutral. So take that for what it's worth. Silver, I still like silver as a long-term play. It's got some strength with gold doing its thing, but it's got, look at these sell tails. Sell, 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 sell. There's not a whole lot of upside growth in silver right now. Let's go to the weekly. This is pretty good basing action. We're seeing some buy tails. We're seeing just a lack of this level being cracked. This low at 1463 is really the all-time low here. 1464, excuse me. So I would trade against that level to the long side if you wish. I got a million downtrend lines here. Get rid of these things. If you wanted to, you could say that there has been a downtrend line broken right here. That's usually the sign of some basing action, some sideways action. That's not a reason to go all in long. But the stock has run out of sellers to the downside. Anybody that wanted to sell was flushed out at this level right here. This is a big, important level to trade off from to the upside. And when it was cracked right here, you can see a lot of people obviously got out and down we went. No one wanted to buy it. Everyone that had bought it, their stops have been triggered and they've been flushed out. So I'm going to continue to look for this to base. Really on a monthly level, I think buyers are stepping in preemptively. Some construction in the neighborhood. And I think they're going to hold it up. If you want to sell some silver puts down at the 14, 13 level, I don't think it's very likely that we reach those levels. It's a high probability any puts you sell down here expire worthless. Silver's really going to have a hard time getting over 18. I can see it basing and taking a run at 18 and failing the first time. If it closes over 18, especially if it fills this gap, if it closes over 18, say 72, on a monthly basis, you could see silver really start to take off to the upside. If the market gets the understanding that we're going to start printing and not stop, you could really see silver take off. Silver is very suppressed. It's very low. There's not a whole lot of reasons to own it right now, but it has a lot of potential. So keep an eye on the markets. The S&P is making something of a comeback as we speak on a daily basis. It held the 50-day. 50-day was right down here, right around here. It's rallying into the close. It's a good sign. It could continue to rally next week. I think it's going to hit some overhead resistance. These people over here that still own at 275, 2075, they might want out. We got a nasty event coming up the end of January that could flush us back down. There's some imbalance at 2020. So don't be surprised if 2020 is tested. You still get a rising 150. You get a rising 200. As I pointed out before, you have a rising 50-day as well. Sorry, the 50s are red here. Let's make it a different color. When the market flushed through the 50, I pointed out the 50 was still rising. Most moving averages were still rising. This was just a nasty shakeout based on news and the plunging oil prices. And there was a good chance we'd get a snapback rally. It's exactly what we got. We have retaken the 50. Market doesn't look bad here. As I said, I like sector picking. This could be a head and shoulders, by the way, setup. So keep an eye on that. I like other sectors. IBB looks very good to me. I think some sectors are certainly going to outperform this year. I think you're going to see biotech, healthcare, and some REITs, some real estate investment trusts, which pay a dividend, and they're pretty solid investment retirement investments that pay a dividend. You get a lot of baby boomers retiring. They're looking for safe, investable, dividend-paying stocks. REITs are great for that. Real estate's very weak. I think you're going to see some nasty pullback in real estate this year. Prices have gotten just too extended, yet again, caused by 0% interest rates. Thank you very much, Federal Reserve Board. And you're going to see some sectors do well and other sectors really, really lag. I think you're going to see tech in general not do very well or go sideways. I think biotech will be the growth area, the growth sector. And you're going to see some other sectors kind of outperform, but not blast off. We're in the later stages of a bull market. Most of the gains to be had in this bull market have been had. We've got about 10% left, maybe a little less, maybe a little bit more, but this is the year to be cautious. If you have strong longs and your chart looks good, don't get flushed out. Feel free to hang on. But if you see the market 10% higher from here, and a lot of bullishness and people getting giddy and retail investors, signs of retail investors stepping in and buying, I would go the other way. I would sell and look for signs of failure in the major indices and individual names. We're already starting to see that. You're going to see names like Twitter, great names like Twitter, which is continuing to go up even as I'm doing this video. Names like Twitter look good. This is a good trade, but it still has a lot of areas above it for resistance. You might see it get up into the 50s. There's a lot of resistance up here. Above that, there's even more resistance. Now you're up in the 60s and 70s. This is the nosebleed territory. Twitter is not going to make a new high anytime soon. It may make a double top, but you won't see former momentum darlings like Twitter, like Tesla, like Facebook, make new highs. Facebook is another one which may make a new high. Facebook actually could test 100. It looks okay on a weekly basis. It's well over the cloud. It's trending higher, but it's been going sideways for a while now. So it's probably going to go sideways and then continue up, but I don't really like Facebook for too much higher. It could go up and tag 100. That would be extremely extended, but it's one of those stocks which may take off, while the others like Twitter may not make new highs. You'll start to see lower percentages of stocks in the market making new all-time highs. New highs versus new lows will start to favor the lows, even as the market trends up. It means participation is thinning. The amount of leaders are thinning. The amount of stocks with real good growth potential in the future is falling. And it's a sign that the economy is weakening, that monetary conditions are tightening, and the multiple attached to the stocks trading at 20 times earnings, even if they're making the same amount of money, if they start trading at 15 times earnings, the value of the stock will fall, even if they're making the same amount of money. So if the multiplier gets hit because we're tightening monetary conditions, and they start to make a little less money because we're starting to veer towards a recession, the stock price, that's a perfect storm. You could see monetary tightening into weakening sales and revenue, which would just crush some stocks, especially the really speculative names like Twitter, like Facebook. Anything that's really not making much money or doesn't have a very wide profit margin or pricing power could get absolutely trashed. Biotech has been immune to this so far. They too will feel the pinch, I'm sure. But for right now, they're making so much money. Monetary conditions are still loose. I don't expect that to hold. There's nothing holding down biotech. That's going to run for a while, I think, still. That's going to be a stock sector that has plenty of reasons to own it. It's still a growth sector. It probably will be for several years to come, thanks to technology in the biology area. But even biotech will have a roof. I just think it's a lot higher than where it is here. It could very well be 330, 350, 400. I'd like to see it really actually blow off. This is almost like a diamond basing pattern here. You've got some people would say this is a bearish base, a bearish. Oh, I don't want to make that a bearish diamond top, but it's broken out of it. And diamond tops are not always bearish. They can actually be bullish if they continue to the upside. They usually resolve one way or the other, and this one's resolved up. So this appears to be one big wide base for now. So I expect to see this move up. Check out some biotech names. Check out the charts. Buy strong charts. Buy stocks that are behaving well. Okay, you want to see the stock behave well. Guild came down, but made this little cup and handle, behaved very well, moved up, recaptured its 50-day. That's a very good behavior. Act, even when the market was down huge today, Act was barely down or green. And now it's holding above this new breakout, not a new breakout high, but this breakout that it held the other day. It's continuing to move up from there. Very bullish. That's great behavior. Look for stocks that are green in a red tape. So when the market has a huge green day, you could very well see these things, gap up on news, gap up on a rumor, and really make you a lot of money. Take profits. Don't let things ride. This market's way too choppy. It's way too unknown. There's no need to be a long-term investor this year. That's going to be very hard to do unless you're buying beaten down gold and silver. The VIX is a tradable option. It's a tradable ETF index, actually, but same difference. So if the VIX gets beaten down and everyone's bullish as hell, feel free to step in and buy, because there are going to be continued rug pulls all year long. Okay,